Yo, what's really good, people? Welcome back to the channel. In today's video, episode 67, we're going to talk about the top movers and fallers. I've sold Shopify. I normally wait to tell you what stock, but obviously I put it up on the gram so everyone knows. I'm going to give you my reasons about selling Shopify and my thoughts about the stock long term into the future. And I'm going to talk a bit about buying the UK. Is it the time to buy UK businesses? So you want to know all of that plus more? Like, comment, subscribe, help the channel get to 7K. Follow on Instagram and Twitter at Infinite Investors. And my link will be in the description, freetrade.io/infant-investors. Click on the link, deposit £1 and you can get a free share of up to £200. Let's get straight into this. So the top movers to talk about for this week. In first place is actually not first place. Let's start from the bottom. Sorry, I'm getting in the wrong direction. We're going to start from the bottom. It is Landsec. So Landsec is up 4.86%. And one of the reasons why Landsec is up 4.86%, or I think the main reason why Landsec is up 4.86%, is the fact that they've announced that they will be restoring their dividend payments come November in 2020. Now, I think that's a significant vote of confidence that they believe the economy is starting to open up. They believe they're going to start generating their rental payments that they, obviously, have been missing for, the last 3 months or more. And they will start paying back shareholders. And when shareholders are hearing this information, they decided that, Landsec is pretty undervalued right now. It's dropped quite considerably over the last, I would probably say, year, you could see over 32%, but over this period, it's probably a bit more significant. And, people are now thinking, I want to get my dividends. So that is the reason primarily that I believe that Landsec has gone up this week. And I think it's going to be interesting to see what happens this week if more REITs or more UK businesses start to announce dates when they will start paying back dividends again. As the economy is starting to open back up, that might start to see the UK start to rise a little bit. So it's interesting. It's the first time I think a UK business has been a top mover for me apart from sentiment, in the last probably 3 months. So, maybe it is the sign of the times. The next stock to talk about is always making dough, AMD. AMD's up 4.47%. And interestingly, with AMD, there's not been any significant information. It's been a tough, I would say last few weeks when you look at AMD. It's been a bit topsy-turvy, and ultimately the last month they've ended downwards. They had peaks of about 57, currently it went down to about 50, and currently it's nesting at 52 $0.34 per share. Now, I think partly with AMD, because obviously it's a manufacturing business of semiconductors, it is pretty cyclical in nature. They definitely had an impact from a COVID standpoint, but there's obviously a lot of good news on the horizon with obviously the PS5, the Xbox Series X, and also they are eating into Intel's and Nvidia's market share with their GPUs and their CPUs as well. Now, obviously that is going to be a long-term burn. I don't think this is going to be an overnight success story of AMD, but I definitely think for a long-term tech stock to hold is something that I'm very, very comfortable holding, and probably will want to add to my position. I am still in profit at the moment, which is great, but I think I'd probably add to my position at some stage into the future. So yeah, been a tough few weeks, but I still see an upside to AMD over the long term, which is why it's a stock that I'm more than happy to continue holding. The next stock and the top mover for this week is Microhard. Microhard has gone up 5.06%. You can see it's pretty much a straight line. Earlier this month they obviously announced they declared their dividend, which is common, and obviously it's on a quarterly basis. It's a small dividend payment. I think it's around 1% annual yield, but obviously it's still showcasing that they are continuing to pay. This is a stock that's done pretty well during the pandemic period as well, showing that it's one of the what I call pandemic proof stocks. And just overall long term, Microsoft is a very safe and sturdy business. They're competing with Apple, trying to be the world's largest public company. I think Apple is still beating it at the moment in terms of its market cap, but Microsoft is very, very close behind. They've got about 130 billion in cash equivalents and short-term investments. What that basically means is that either money that's cash or money that they can convert to cash within a 3-month period. So they've got obviously that liquidity that they can then reinvest into different different areas of their business, and they spend about 13% annually just on research and development. So that means nearly nearly not a quarter, nearly about 15% of their revenues they devote to trying to find new innovations and new ways to grow this business. So I think Microsoft for me is always going to be a long-term play and a long-term stock. I don't think I have a big enough position in Microsoft at the moment. So I think that's something that I definitely am probably going to work on over the next 6 months, is increasing this position. Again, I'm probably not going to just drop, a couple of grand in straight away. I might just have to average it in, or I might, add some later on if there is a bigger recession or stocks fall. So that's something that I'll obviously play by ear on a case-by-case basis. But in terms of holding this for the long term, most certainly Microsoft will play that part. Now, in terms of the top fallers, the first top faller to talk about is Barratt Development. Barratt Development was obviously, my favorite stock of 2019, and you can see like it did pretty well way before the corona situation came and just ripped it all apart. But at the moment it's down 1.39%, which isn't the worst, to be fair. In fact, trying to find negative news about why it's down is pretty difficult, because this is a stock that's been down, every single week for the whole corona period, to be fair. So there's no specific information, and in fact, when you actually start to research some of the information about Barratt Development, what you'll find is that there's more information about, is this the time to buy Barratt Development for the long term. You've got Credit Suisse issuing a broker note. We spoke about broker notes previously. This is just when an investment bank or a hedge fund or a company, an analysis firm that follows a specific stock issues basically a memo saying this is what we feel the stock is going to do and these are our reasons why. So Credit Suisse done that this week about Barratt, and they feel that there's a 24% upside due to its current share price, which would obviously be quite a significant rise for any investors still into Barratt. You've got the fact that they're rebuilding homes in Scotland as well, which has started to occur this week, which is quite significant. And obviously with the economy reopening up, it might prove to be beneficial for the housing market and some of the existing assets that they've got. So there's a lot to be positive about with Barratt. I think again they were very hard hit, and maybe it might be time to average down this position, buy a little bit more, and obviously ride it out for the long term. We shall see what happens there. The next stock to talk about is Imperial Brands. They're the next top faller at 3.35%. Now again, with Imperial Brands, it's been a bit topsy-turvy. During the beginning part of the pandemic period, they were actually rising along with sentiment, and then they've kind of tailed off. They were selling different parts of their business. We talked about them selling their premium cigar business, trying to pay down their debt, trying to diversify some of their offerings in different regions such as the Middle East and so forth. But they just seem to have a really topsy-turvy time. So when we talk about certain stocks that I wouldn't want to hold in the long term, Imperial Brands is one of those businesses that I wouldn't want to hold in the long term. Obviously, I have a position. I'm going to continue trying to average down this position, and obviously see where it takes me in the long term specifically. But yeah, I mean, there is a bit of positive news. Another broker note was issued, this time by Goldman Sachs, and that broker note was for £17 a share. I'm currently averaging about £19 a share, as you can see here. So even if it did reach that target within this year, I would still be way above it. So I've got a bit more averaging down to do on this, which is perfectly fine. I am leaving some cash on the side in order to do that. But I don't think this stock will feature my portfolio in 2021. We'll see what happens, but I think it's probably time that I need to, put this cigarette out. You feel me? Pun intended, fam. Now, the last stock to talk about is Taylor Wimpey. Now, Taylor Wimpey has dropped 3.49% this week. But again, it depends on how you want to look into the information, whether you see it as a positive or a negative thing. I personally see this as a bit of a positive move, but it just depends on your horizon, and I think this is a long-term positive move. So what Taylor Wimpey's basically done this week is they've raised about £500 million in new shares issuance. So we talked previously about share buybacks. Share buybacks or stock buybacks is when a company buys back some of their outstanding shares, and what that does, it means it reduces the amount of outstanding shares available. When the amount of outstanding shares are reduced, that effectively raises the share price of the existing shares because there's less shares in demand, so existing shareholders will see a bump in their share price. With the reversal of that is basically a new share issuance. So if they issue new shares into the market, it effectively dilutes all of the existing investors, and therefore their values of their shares would drop. And that's what's basically happened with Taylor Wimpey. However, when companies do that, they do that for specific reasons. They will typically issue new shares because they want to raise some capital for a specific purchase or for a specific reason that's going to help them, generate more money and more dividends in the future. So again, it depends on how long term your view is on whether this is a negative thing. If your view is short term, then it's going to be a negative thing. But if your view is long term, then it can be a positive thing. So they've basically done a share issuance to raise about £500 million, and the reason why they've done that is so that they can buy up more land at cheaper rates because of the COVID situation, so they can obviously build upon more properties and so forth. Or I think in some instances I read somewhere that actually they might just hold on to that land and potentially sell that land at a increased rate. So that's what Taylor Wimpey is looking at doing, and that's the reason why they've issued new shares, and that's the reason why the share price has dropped. Me personally, I don't see this as a negative thing. I think they obviously are reinvesting back into the business, but obviously I think the housing market, I would expect an uprise over the second half of the year, but I guess it all depends on what happens with this whole recession situation, if it continues and if it gets worse, and so I think it's just going to be an interesting one to watch. I haven't really made my mind up on Taylor Wimpey going forward, especially because I also hold Barratt, and I think I don't really need to have two house builders, but I would say at the moment I would just continue to average down. I'm not in the worst predicament. It's only 20%, and it's something that I can obviously add more money, take it off my watch list, mate, add more money to, and we can see what happens. But I think that lends itself to me talking about, is it time to buy the UK? Because we're seeing that Taylor Wimpey is obviously issuing more shares to do house building. We're seeing that Landsec has gone up because, they are going to start raising the dividends. I bet you there's probably going to be a lot more companies this week from the UK that's probably going to announce that they're going to be comfortable to start paying dividends by a certain date, maybe not next week, but over the next couple of weeks. So the question becomes, is it time to buy the UK? Are we currently at the bottom of the market from a UK stock market performance standpoint? We've seen it drop literally consistently for the last 3 months, and is it time to buy so that in the future you start to see some positive gains? And I think it depends is probably my answer, and I know it's a bit of an anti-climax answer, but I think it depends. One thing I still want to look at is what is going to happen with the next GDP announcement. I was talking to a friend recently, and he said he doesn't think that's going to have any impact because the stocks have gone down so far, and I think that's a really definitely a likely scenario and a likely outcome. But something, just through doing these videos and seeing the news headlines week on week and sort of tracking performance movements, I know how much certain news headlines can actually have an impact on stock market performance. And I think if at the end of July we're seeing headlines saying the UK economy shrunk 15% for the first half of the year and blah 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 blah, and now we're in a technical recession, and the recession word just keeps getting plastered around everywhere, I do think people will panic. I do think people are going to start selling up because maybe they won't know what that means for the long term, and they're going to be a bit fearful, etc., with not knowing the situation. Not to mention, obviously, there's a lot of people that's currently on furlough in the UK. I can't remember the actual figure, but it's a significant amount of people that's on furlough. When that government funding ends, which seems like it's going to happen, I think, around October, a lot of those businesses might not be in a position to rehire back those staff. So again, I think that's going to have a further pressure on the UK economy and businesses. So I think investing into the UK now can be wise for some reasons, because it's gone down so far and a lot of stocks have gone down so significantly that there might actually be a really good opportunity. And I think it can depend on sector to sector. I'm finding that some stocks like Legal and General, they are going up, although very modest gains, they are starting to go up. So I think there will be certain sectors which will probably rise quicker than others, which is just natural in the stock market. But I don't know if it's time to just put a whole bunch of money in the UK and see if everything goes up. Like positions that I've got like Lloyd's, which I genuinely believe in for the long term, still right now I wouldn't add too much more into Lloyd's just yet. but I probably will do by the end of the month if I see either no change or Lloyd's is worse off. So if Lloyd's is worse off by the 1st of August, or there's no change to Lloyd's situation, then I might do that. So I think, again, what I would, I'm not recommending or advising what you guys should do, but if you were to ask me, I would say, be a bit patient. I think now patience is going to be a really important thing. I wouldn't be too aggressive on the UK if you are heavily exposed into the UK. But I wouldn't sell off all your positions either. If you've got positions that are in the red, I personally would be either maybe dollar cost averaging them, or just holding the ones that you want to hold and seeing what you're going to do when the end part of this month and the end half of the first half of the year actually starts to play out. A lot of this money, again, I mentioned before, I don't need anytime soon, so I don't need to make any hasty, rash decisions. I'll just make decisions on what I believe is happening with this current time. Now, one of the decisions that I made, which you guys see and which I mentioned on my Instagram, is obviously I've sold Shopify. So you can see I sold all 4 shares of Shopify at 3183. In fact, let me go to find the Shopify stock. And I've gone in it recently. I must have done, no? All right, cool. Let me just type it in. So just to give you kind of a bit of a clarity, so here on Free Trade, you can see that obviously I bought in 20th of October. So basically the beginning of November, I bought for 1,012 4 shares, and I sold for 3,183, which is obviously, a couple of grand in profit. That works out to be about 214% in terms of a return. Now, I received some comments on the gram like, why did you do that? Like, don't you think it's going to go higher? Don't you believe in it long term, etc., etc., etc.? And I think there's a bit of a confusion when we talk about this word long term, or we talk about why people are buying and selling. I think long term is obviously a view you should take, but at the same time, I don't think you should be blindly long term without understanding the current circumstance of a specific stock. I always wanted to get about 100% return in Shopify. When I invested it in October, my goal was like, I hope I can get 100% by the end of 2020. If you told me in October when I bought the stock in 2019 that I'm actually going to get 200% in 8 months, then I would have bit your hand off, and obviously I would have invested a lot more money into the stock if I knew that was going to be the situation. So on one hand, could I have held longer? Yes. In fact, I sold Shopify about $1,000 for the share price, and it's now like at 1,029. So of course I could have held longer. I probably would have made another $150 or something on this. But would that be greedy? Potentially. And I think also, because I think the market is starting to open up, and I'm trying to look at the whole economics surrounding that Shopify is kind of in. The market's starting to open up again, and one of the reasons why Shopify done so well is because the actual retail market was closed. You see Landsec is rising, so people are going to be out a lot more, and I think that's going to have a bit of an impact to Shopify's business in the short term. I'm not saying long term, but in the short term, that's going to have an impact. I think, again, when more job numbers are being released, when the US announced a technical recession by the end of the month, I personally think, and it's all theoretical, but I personally think that's going to have an impact to people's consumer spending. And regardless of whether it's retail or online, people will cut down and curb specific spending habits. That might have a potential impact onto Shopify, again, within the short term. Now, if that happens and Shopify's share price drops down to 900, 800, 700, 600, whatever, if that happens, would I invest in Shopify again for the long term? Absolutely. So Shopify, I would most certainly get back into it. I see it very similar to the whole, when Tesla basically dropped back down to 300 during the coronavirus period. That was a good time to potentially re-enter. Now, the only reason why I couldn't do that, which I've talked about on multiple occasions, is because I was maxed out. I had maxed out my ISA at that time. So because I had maxed out my ISA and I didn't really want to invest in my basic account, I couldn't obviously, buy Tesla at that drop. But I think a similar situation could happen where it could drop for a while, Shopify, but obviously I think it would go back up again, and I would be riding that for the long term. So more than happy to get back into the stock. I don't believe there's anything wrong with the stock. I just wanted to take my profits, and this is the first time that I've sold a stock for the reason of taking profits. Typically, you guys who follow this channel for quite some time, most of the time when I'm selling a stock is because either it doesn't fit in my strategy no more, or I don't believe in it, or I accept it was a poor investment decision. But this is the first time that I feel like it was a good investment decision. I hit my goal. In fact, I doubled the goal that I originally had with Shopify. It's time to not be greedy, take the profit, reinvest that money somewhere else. And obviously, I'm not going to go spend that money. The money's just sitting there in my account waiting to be reinvested. And obviously I'll reinvest that money when the time is right. All of the stuff they're doing Facebook, all of the stuff they're doing with Walmart, all of the stuff they're doing with their Shopify business bank account stuff, I fully believe in that. I subscribe to that. And I'll let you know a little secret. Shopify is actually one of the first stocks that I bought about 3 years ago on eToro originally. And I made like 30% or 40%. I can't remember the exact figure. I got the receipts though. But I made like 30%. And then I left it. And then obviously look what's happening now. So, can I get back into it for a third time? Most certainly. But it was time for me to just close the curtains for now, take the profit and see what happens. And I think, the moral of the story is, I think that even if you are a long-term investor, which I am, there's no harm in, taking profits off the table when you feel like, a stock might have reached its peak for this current time period. But if it drops back down and you want to get back into it, it's completely your call. Ultimately, everyone can do 15 different things and still make money. Do you know what I mean? So it all depends on the case by case basis. But yeah, I think next week's going to be a very interesting week. I think the UK will probably start to see some more gains, I'm expecting, but who knows. But it'll be particularly based off news around, maybe more companies saying that they're going to announce their dividends, maybe more broker notes being issued on UK businesses saying that they expect it to rise or get to this potential share price. So we might see more gains, obviously, with the economy opening up and stuff. So it'll be interesting to see what happens, but I think that's likely the scenario. However, I could be wrong. Hopefully you found this video useful. If you did, like, comment, subscribe. And I will catch you next time with another investment video. Take care. Peace.